Welcome back. Let's focus on GE Shipping. We have with us Mr. G Shivakumar, who is the Executive Director and CFO of the company. Hi, Mr. Shivakumar. Always good to speak to you. Thanks a lot for joining in. Well, the last quarter was marked by a couple of factors like the Red Sea troubles, the OPEC plus curbs as well. Could you give us a sense about how rates are panning out? If you could tell us for this quarter, what are rates looking like? And if you compare it with, say, last year, how are things looking? And even the previous quarter, a broad sense, category-wise, about the rates.
Good morning, Nigel, and thanks for having me. Always a pleasure to be here. The winter, to give you the headline news first, the winter has been disappointing for the tanker business. Typically, we have a very strong period through the Northern Hemisphere winter. The winter has been disappointing.
Right.
So if you just look at what's happening with tanker rates today and this quarter versus last year, the large tankers, that is 100,000 tons capacity and higher, typically these are crude tankers, are probably averaging about $25,000 to $30,000 a day versus about $45,000 to $50,000 a day, same time last year. And versus the previous quarter, that is October to December, they're about the same. The smaller tankers, which are the product tankers, which are around 50,000 tons carrying capacity, are making about $20,000 a day on average versus probably $35,000 a day in the corresponding quarter and around the same rates in the previous quarter. So it's last year we had a strong winter. This time we do not have a strong winter season for tankers. Bulk carriers are also significantly lower than they were a year ago. On average, probably $5,000 a day lower in earnings.
What does that do to your operational performance then? You know, Mr. Shivakumar, we often ask you the freight rates, and then the corresponding question to that is your break-even rates for all of these. How far above these break-even are you, or in what categories are you below break-even right now because of these rates?
Yeah. In tankers, we are above break-even in all the sectors. Whether it's the small tankers or the large tankers, typically the break-evens are $10,000 to $15,000 a day. So we are well above those numbers, except that the profitability has come down. It's just a reduction in the returns in the profitability. In bulk carriers, we are in the smaller bulk carriers, we are below break-even at current spot rate. So typically across the board, whether it's a 57,000, 58,000 ton bulk carrier or 180,000 ton Cape-size bulk carrier, rates are between $6,000 and $8,000 a day. And this is just around operating costs. So you're not even recovering depreciation at current spot rates.
And
but
what
tankers continue to be profitable even at subdued spot rates. And of course, we have some ships on time charter.
And what is your prognosis on rates going forward? It's been a disappointing winter. Red Sea crisis has been there, but a lot of people are hoping for a brighter summer. Just trying to understand, where do you see rates headed from here? Do you see them going lower, or maybe they've bottomed out?
So the biggest factor, Mangalam, is going to be on geopolitics. And we've seen in the last 2 weeks or so, a new round of sanctions on Russia-linked ships. And that's covered about 150 plus tankers, 150-ish tankers, which is about 2 to 3% of the fleet. And if those ships are not able to trade, then that immediately removes supply from the market. So that's one big factor which can come in. If sanctions on these ships, this is the so-called dark fleet, which is carrying out the sanctioned trade. If that goes, then that's an automatic reduction in the supply of ships. So that's one big factor. And obviously, the US administration is now tightening the sanctions on Russia and related trades. We've seen one port group in China, which is the Shandong port group, rumored to have said that they will not accept sanctioned tankers anymore, sanctioned vessels anymore. And that port controls more than 1 million barrels per day in imports of oil. So again, if sanctioned ships are not able to trade, then that removes them from the market. On the other side, you could say that oil goes out of the market. So finally, it is If oil demand stays reasonably strong, supply goes out of the market because some ships are just not able to trade. And we look back at what happens when the US sanctions ships. The last round of sanctions was in November 23 when about 30 or 35 ships were sanctioned. After that, they've hardly traded at all. So they just effectively get taken out of the fleet. So then that's a reduction in the supply. So all of this is sort of up in the air because there are so many of these factors which can affect the way freight rates can play out.
All right. Your NAV has dropped despite having a good EPS, cash EPS in the past quarter. Do you expect ship prices to go down further?
They have gone down already. So they've gone down about 15% on average, slightly more for the older tankers, which had gone up a lot in value, maybe 20%. So they have gone down. So we are still waiting for the opportunities. Dry bulk have also gone down a little bit. And obviously, because of dry bulk earnings not having been very strong, unlike tankers, they are closer to where we may think of investing. So we are getting closer, but not quite there at the point of investment, where we would say that let's go out and put in a big amount of capex.
So it's corrected by 15%. You're still evaluating. So how much more does it have to fall for you all to be interested?
I'm not going to get into those numbers, but it has to have a substantial fall in tanker prices for us to really think this is the time to go, not all in, but very significantly into the market.
Right. As they say in the markets, it's a no-trade zone right now. Not too high for you to sell any of your assets and not too low for you to, perhaps buy any of those assets. So we'll keep an eye out on that trend as it, continues. But the final question, and we always ask you about, renegotiation of rents in your offshore business. What is coming up next and what is the likely sustainable EBIT in that business quarterly going to be?
Yeah. So we have 2 rigs which are up for repricing now, we need to find employment, where we've bid them into 2 tenders, but we don't know what will be the outcome, whether we will win those contracts, and if we do, at what price. So it's tough to give a prognosis because we haven't had a pricing for the last year or so in this market. So it's tough to give a prognosis on what could happen to those rigs. What has happened in the vessels business is that the vessels business has been doing pretty strongly. It's come back to quite solid profitability, where all the contracts, every new contract that we've entered into has been higher than the previous contract. So the vessels business has been doing pretty good profitability. The rigs business, because the rigs haven't got contracts, that's something that still up in the air. And we don't know what can happen there.
All right, Mr. Shivakumar, we'll leave you on this uncertain note, but leave you with a promise to join us as soon as you have any updates on freight rates, if you're buying any ship, if you're selling anyone, or there are any of those sanctions that you spoke about, any geopolitical issue that comes by that impacts your business as well. And at the same time, when you reprice those contracts, we leave you with a promise to join us and tell us exactly how it will impact your business, whether positively or not. Thank you so much for joining in. Wish you good luck for the quarter ahead.